Before you file your UAE corporate tax return, make sure your business is actually ready. One small mistake in your accounts, invoices, expenses, or tax calculation can create serious compliance problems later. Hello UAE business owners, welcome to KPM Global Services. Today we are discussing a very important topic, UAE corporate tax return filing and what every business owner must prepare before submission. Corporate tax filing is not just about logging into a portal and submitting numbers, it is a full financial review of your business. The first thing you must confirm is your corporate tax registration status. Many business owners confuse VAT registration with corporate tax registration. Both are different. VAT is related to taxable supplies and VAT returns. Corporate tax is related to business profit and taxable income. Before filing, check whether your business is registered for corporate tax, whether your corporate tax registration number is available, and whether your company details are correct. The second step is to confirm your tax period and filing deadline. Your corporate tax return is usually connected with your financial year. For example, if your financial year ends on 31 December, your accounts must be completed up to that date. The next and most important step is bookkeeping. If your bookkeeping is not complete, your corporate tax return cannot be accurate. Before submission, make sure all sales invoices are recorded, all purchase bills are entered, all bank transactions are matched, all cash expenses are supported, and all customer and supplier balances are reviewed. Now let's talk about financial statements. Before filing your corporate tax return, your profit and loss statement, balance sheet, trial balance, general ledger, bank reconciliation, and fixed asset schedule should be ready. Your accounting profit is the starting point for corporate tax, but it may not be the final taxable income. This is why business owners should not file based only on rough profit numbers. Now review your revenue. Your sales invoices, bank receipts, customer advances, credit notes, VAT returns, and accounting revenue should be checked. If your VAT return shows one revenue figure and your accounts show another figure, the difference must be understood. Next, review your expenses. Only genuine business expenses should be recorded. Rent, salaries, professional fees, marketing, office expenses, software, bank charges, and business travel should all have proper support. A common mistake is recording personal expenses as business expenses. Personal shopping, family travel, personal vehicle costs, and owner lifestyle expenses can create tax risk. Every major expense should have an invoice, receipt, agreement, or payment proof. Now check related party transactions. If your company has transactions with shareholders, group companies, family businesses, or related entities, these should be properly recorded and documented. These transactions should be clear, reasonable, and supported with documents. If your company is in a UAE free zone, you need extra review. Free zone companies are also within the UAE corporate tax system. Some may qualify for 0% tax on qualifying income, but this depends on conditions. Do not assume that every free zone company automatically pays zero tax. If your business is VAT registered, reconcile VAT records with your accounts. Now prepare your supporting documents file. Keep your trade license, corporate tax registration details, VAT details, financial statements, bank statements, invoices, receipts, rent agreement, payroll records, loan agreements, fixed asset register, related party documents, and tax calculation working. Before submission, avoid these common mistakes. Do not file with incomplete bookkeeping. Do not ignore bank reconciliation. Do not record personal expenses as business expenses. Do not assume free zone income is always tax-free. Do not submit estimated numbers. Do not miss supporting documents. Do not ignore related party transactions. And do not wait until the deadline to prepare your accounts. A strong corporate tax return needs clean records, proper financial reporting, and a clear tax calculation. To summarize, before filing your UAE corporate tax return, prepare your bookkeeping, financial statements, revenue review, expense support, VAT reconciliation, bank reconciliation, related party records, free zone analysis, and final tax computation. A business with clean accounts is always stronger in front of tax authorities, banks, investors, auditors, and business partners. Subscribe to KPM Global Services for more practical videos. Share this video with a business owner who is preparing for corporate tax filing. Comment your question below and watch the next video for more useful UAE business guidance. Many UAE businesses think corporate tax registration is only required when they make taxable profit. That is a serious misunderstanding. Welcome to this important business compliance update from KPM Global Services. Today, we will explain who must register for corporate tax in the UAE, what happens if you delay, and what business owners should do now. Corporate tax registration is not just for large companies. In the UAE, most taxable businesses are required to register with the Federal Tax Authority and obtain a corporate tax registration number. This includes mainland companies, free zone companies, UAE companies, and other juridical persons, foreign companies with a permanent establishment or taxable presence in the UAE, and natural persons conducting business activity in the UAE where the turnover crosses the required threshold. One important point is this: even free zone companies may need to register for corporate tax even if they expect to benefit from 0% tax on qualifying income. Registration and tax payment are two different things. A company may have no tax payable, but it may still have a registration and filing obligation. For natural persons, such as individuals conducting business in the UAE, corporate tax registration generally applies when business turnover exceeds AED 1 million in a calendar year. These individuals must check their deadline carefully because the registration timeline is different from normal companies. For companies, the deadline depends on factors such as license issuance month, incorporation date, and whether the entity is resident or non-resident. New entities formed after the specified rules came into effect generally have a limited time from incorporation to register. So business owners should not wait until the tax return deadline. Now, what happens if you delay corporate tax registration? The main risk is an administrative penalty of AED 10,000 for failing to submit the registration application within the specified timeline. This penalty can directly affect your compliance record and create unnecessary cost for the business. But the risk is not only the fine. Late registration can also delay your corporate tax return filing, create problems in financial reporting, affect audit readiness, and cause stress when banks, investors, or business partners ask for compliance documents. Common mistakes include assuming that small businesses do not need to register, thinking that free zone companies are automatically outside corporate tax, ignoring the registration deadline, not keeping proper accounting records, and waiting until the last month to prepare financial statements. The right approach is simple. First, review your trade license, business activity, incorporation date, and tax period. Second, confirm whether your business is a taxable person, exempt person, free zone person, or natural person under corporate tax rules. Third, keep your bookkeeping, invoices, expenses, bank statements, and financial reports properly updated. Fourth, complete the registration through Imara tax before the applicable deadline. Fifth, plan for future corporate tax filing even if you expect zero tax payable. There may be specific situations where a late registration penalty can be waived or refunded if the required conditions are met, but businesses should not depend on relief after making a mistake. Proper compliance is always safer than correction later. If you are running a business in the UAE, corporate tax registration should be treated as a priority, not as an optional task. If this video was helpful, please like, subscribe, and comment your question below. Also share this video with any business owner who may still be confused about UAE corporate tax registration. For more practical updates on accounting, tax, VAT, audit support, bookkeeping, financial reporting, and business advisory in the UAE, watch our next video and stay connected with KPM Global Services. For professional assistance, you can also contact us on the details given. Many UAE business owners think small business relief means they do not need to register, file, or maintain accounts. That is a dangerous misunderstanding. Welcome to another clear and practical UAE tax update from KPM Global Services. Today we will explain small business relief under UAE corporate tax, who can claim it, who cannot claim it, and what businesses should do before making the election. Small business relief is a special relief under UAE corporate tax designed to support small businesses, startups, entrepreneurs, and micro businesses. If an eligible business elects for this relief, it is treated as not having taxable income for that tax period. In simple words, eligible businesses may reduce their corporate tax burden, but only if they meet the required conditions. The main condition is revenue. To claim small business relief, the revenue of the taxable person must be AED 3 million or less in the current tax period and all previous tax periods. This is very important. It is not enough to check only the current year. For example, if your revenue is AED 2 million this year, but it exceeded AED 3 million in a previous tax period, your business may not be eligible to claim small business relief. The relief is available to resident persons. This may include UAE resident companies and natural persons conducting business activities, subject to the corporate tax rules and eligibility conditions. The relief must be elected for each tax period. It is not automatic. A business should review eligibility every year and make the election properly in the corporate tax return. Now, who cannot claim small business relief? A qualifying free zone person cannot elect for small business relief. This is because qualifying free zone persons have their own special corporate tax regime, subject to separate conditions. Also, members of multinational enterprise groups with total consolidated group revenue of more than AED 3.15 billion cannot claim this relief. Non-resident persons are also outside the scope because the relief is for resident persons. Another situation where a business cannot claim the relief is when revenue exceeds AED 3 million in any relevant or previous tax period. Once the threshold is crossed, the business should carefully review whether the relief is still available. There is also an anti-abuse risk. A business should not artificially split its activities into multiple companies only to stay below the AED 3 million threshold. If the Federal Tax Authority identifies artificial separation, it may treat the arrangement as made to obtain a corporate tax advantage. Business owners must also understand the trade-off. If you elect for small business relief, certain other exemptions, reliefs, deductions, tax losses, or net interest expenditure benefits may not be available for that tax period. So, claiming the relief is not just a simple yes or no decision. It should be checked with proper accounting records, financial reporting, and tax planning. Common mistakes include assuming that small businesses do not need corporate tax registration, using profit instead of revenue to check eligibility, ignoring previous tax periods, assuming all free zone companies can claim it, and making the election without reviewing future tax impact. The practical steps are simple. Check your UAE tax resident status. Review your revenue for the current and all previous tax periods. Confirm whether you are a qualifying free zone person or part of a multinational group. Keep bookkeeping, invoices, bank statements, and financial reports properly updated. Review the effect of the relief before filing your corporate tax return. And most importantly, do not confuse relief with non-compliance. Even if you claim small business relief, proper records, registration, and filing responsibilities may still apply. Small business relief can be very useful for UAE SMEs, startups, and entrepreneurs, but only when claimed correctly. If this video helped you understand small business relief in UAE corporate tax, please like, subscribe, and comment your question below. Share this video with any UAE business owner who may benefit from this update. For more practical updates on corporate tax UAE, accounting services in UAE, VAT compliance UAE, bookkeeping, audit support, financial reporting, and business advisory, watch our next video and stay connected with KPM Global Services. For professional assistance, you can also contact us on the details given. Hello everyone. If you walk through almost any busy area in the UAE, you will notice one thing. Cafeterias are everywhere. And the reason is simple. They serve fast, affordable, and highly repeatable food items. But here's what most people don't understand. A successful cafeteria is not built by selling hundreds of random items. It is built around smart menu engineering. The right products, the right pricing, the right margins, and fast-moving customer favorites. In this video, we are going to break down the best-selling cafeteria items in the UAE, which products usually generate stronger margins, and how successful cafeterias structure their menu for maximum profitability. The UAE cafeteria market works because of three things: high population movement, fast-paced lifestyle, and strong food delivery culture. People want quick meals, affordable snacks, tea, juices, and late-night food. Office workers, students, labor staff, residents, and delivery customers all create daily demand. That is why cafeterias can generate strong repeat business if the menu is structured correctly. The real profit usually comes from volume and repeat customers, not expensive pricing. The first and most powerful cafeteria item in the UAE is tea. Tea is part of daily life here. Morning, afternoon, late night, people drink it constantly. And from a business perspective, it is extremely powerful. Low ingredient cost, fast preparation, very high repeat demand. Many cafeterias build loyal customers almost entirely around their tea quality. The profit per cup may seem small, but the volume creates strong daily income. The second best selling category is paratha rolls. This includes egg paratha, cheese paratha, chicken paratha, almond chips paratha, and shawarma paratha. These items are popular because they are affordable, filling, and quick to prepare. One basic product can create multiple menu options. That improves profitability and simplifies inventory management. Parathas also work throughout the day. Breakfast, lunch, evening snacks, and late night orders. Shawarma is one of the strongest selling fast food items in the UAE. Why? Because it is fast, affordable, filling, and highly delivery friendly. Customers order shawarma repeatedly, and cafeterias can create multiple versions. The key to profit is consistency and portion control. A cafeteria with good shawarma can build strong recurring business very quickly. The next major category is burgers and sandwiches. Chicken burgers, zinger burgers, club sandwiches, grilled sandwiches. These are powerful because they appeal to almost every customer segment. They also work extremely well on food delivery apps, and cafeterias can improve profitability by creating combo meals with fries and drinks. Fresh juices are another strong cafeteria category. The UAE climate creates constant demand for cold drinks and juices. Popular options include mango juice, avocado juice, orange juice, cocktail juice, and watermelon juice. Juices also increase average order value because customers often order them alongside food. Breakfast can become one of the strongest revenue windows for UAE cafeterias. The key is speed and affordability. Morning customers usually want quick service and consistent taste. Lunch boxes and rice meals work especially well in high volume areas. Chicken biryani, fried rice, grilled chicken rice, curry meals. These products are popular near offices, labor accommodations, warehouses, and industrial zones. Lunch boxes create volume-based revenue, and if operations are efficient, margins can remain healthy. Desserts increase impulse buying. Brownies, donuts, pastries, kunafa cups, mini cakes. Customers often add desserts with tea or meals. Presentation is extremely important in this category. Visually attractive desserts perform strongly on Instagram and delivery apps. This helps cafeterias increase both sales and branding visibility. Now let's talk about one of the smartest cafeteria profit strategies: combo meals. Instead of selling one item, you sell a complete package. This improves both sales and operational speed. Successful cafeterias usually structure menus around three categories: traffic items, margin items, and volume items. Traffic items bring customers daily, like tea and parathas. Margin items increase profitability, like juices, snacks, and desserts. And volume items create bigger daily revenue, like lunch boxes and combo meals. The goal is balance, not just more products. The best cafeteria menus are simple, operationally efficient, and easy to repeat consistently. Now let's quickly cover mistakes. Very large menus, poor costing, weak packaging, slow service, and inconsistent taste. Many cafeterias fail because they try to do too much. Focus on products that move fast and generate repeat customers. The UAE cafeteria business can become highly profitable when the menu is built strategically. If you are planning to start your cafeteria business in the UAE and need professional guidance, you can contact us on the given details. Also, like this video, subscribe to the channel, and follow us for more business insights and opportunities. Hello everyone. Every year, thousands of entrepreneurs enter the UAE market with ambition, capital, and high expectations. But a large percentage of them fail within the first year. Not because the UAE lacks opportunity, but because they misunderstood how the system actually works. Before you take your first step, you need clarity. Because in the UAE, success is not about starting fast. It is about starting right. This video will walk you through the complete strategic reality of doing business in the UAE, including structure, cost, compliance, and most importantly, how to survive and grow in this market. The UAE is one of the most advanced business ecosystems globally. It offers global access, strong infrastructure, and a tax-efficient environment. However, it is not a beginner-friendly market. Customers here are experienced. They compare quality, speed, branding, and professionalism. You are not competing with small local businesses, you are competing with international standards. This means your product, service, and communication must be sharp from day one. There is no space for average execution. Before anything else, your business structure defines your entire journey. There are three primary options. Mainland setup allows you to operate across the UAE and directly access local clients. Free zone setup offers full ownership, simplified processes, and is ideal for international or service-based businesses. Offshore setup is designed for global operations and asset structuring, not for local business activity. The mistake most people make is choosing based on cost. The correct approach is choosing based on how you plan to generate revenue. Your structure must align with your business model, not your budget. Let's address one of the most misunderstood areas: cost. Most people only calculate the license fee, but that is just the starting point. You need to consider office or workspace requirements, visa allocations, medical and Emirates ID costs, bank setup, and ongoing operational expenses. If you plan to build a team, salaries and accommodation become part of your structure. Marketing is another major investment. Without visibility, your business does not exist. The most important element is financial runway. You should be prepared to operate for at least 6 months without depending on immediate income. This gives your business time to stabilize. Banking in the UAE is a process of evaluation. Banks assess your business activity, clarity of operations, and financial background. Incomplete or unclear documentation leads to delays. Your business must demonstrate legitimacy and structure. Once operational, compliance becomes critical. Accounting, VAT registration if applicable, invoicing and record keeping must be accurate. This is not optional. The UAE operates on strict regulatory systems. Ignoring compliance can lead to penalties or operational restrictions. Many businesses fail not at setup but after setup because they cannot generate clients. The UAE does not reward presence, it rewards positioning. You need a clear system to attract and convert clients. Networking plays a major role. Business relationships often open doors faster than marketing. At the same time, your digital presence must reflect credibility. Clients research before they engage. Your website, social media, and personal brand influence their decision. Without a client acquisition strategy, your business will remain inactive regardless of how well it is structured. Choosing the right business is not about following trends. It is about identifying demand. The UAE market responds well to specialized services, premium offerings, and niche solutions. Entering a saturated market without differentiation creates pressure. You must define your value clearly. What problem are you solving? Why should a client choose you over competitors? Your positioning determines your pricing, your clients, and your growth. Sustainability in the UAE requires discipline. Your operations must be structured. Your processes must be consistent. Your service must meet expectations every time. Quick wins are possible, but long-term success comes from systems. Focus on building a brand, not just a business. Because in this market, reputation grows faster than advertising, and once established, it becomes your strongest asset. Starting a business in the UAE is not difficult, but building a successful one requires clarity, planning, and execution. If you approach it strategically, the opportunities are exceptional. If you are planning your business setup and need structured guidance, you can reach out to us on the given details. Also, make sure to like this video, subscribe to the channel, and follow us for more high-level business insights. Hello everyone, what if clients started reaching out to you instead of you chasing them? No cold calls, no constant follow-ups, no dependency on ads, just a strong personal brand that attracts high-value clients automatically. In today's UAE market, where competition is increasing every day, your visibility is your biggest advantage. In this video, I will show you exactly how to build a personal brand that consistently brings clients to you. Step by step, let's begin. The UAE is one of the most competitive and opportunity-driven markets in the world. Thousands of professionals, consultants, and business owners are offering similar services. So how do clients decide who to trust? They choose the person they see, recognize, and believe in. A strong personal brand creates authority. It builds trust before the first conversation. And most importantly, it positions you as an expert in your field. In Dubai and across the UAE, decision makers are highly active on platforms like LinkedIn and Instagram. If you are not visible, you are invisible. The first step is positioning. You cannot be everything for everyone. You must clearly define what you do, who you help, and what results you deliver. For example, instead of saying I do marketing, say I help real estate companies in Dubai generate qualified leads. The clarity attracts the right audience. When your positioning is clear, your content becomes powerful and targeted. This is where your personal brand begins. Content is your digital presence. It works for you 24/7. Your content should educate, solve problems, and showcase your expertise. Focus on 3 types of content. First, value-based content that teaches something useful. Second, authority content where you share insights and opinions. Third, proof content such as case studies, results, and client experiences. Consistency is more important than perfection. Posting regularly builds visibility and trust over time. Choosing the right platform is critical. In the UAE, LinkedIn is one of the most powerful platforms for professionals and consultants. Instagram works well for visual branding and lifestyle positioning. YouTube helps in building deep authority and long-term trust. Focus on 1 or 2 platforms initially. Master them before expanding. Your goal is not to be everywhere. Your goal is to be visible where your target clients are. Choosing the right platform is critical. Trust is the most important factor. People buy from those they trust. Share testimonials, client results, and real experiences. Show your journey, your process, and your expertise. In the UAE market, reputation spreads quickly. One strong result can bring multiple referrals. Always focus on delivering value and maintaining relationships. Many people fail because they lack consistency. Some try to target everyone and end up attracting no one. Others focus only on selling instead of providing value. Avoid these mistakes. Stay consistent, stay clear, and focus on long-term growth. Personal branding is not instant. It is a long-term asset. A strong personal brand can completely transform your business. Instead of chasing clients, you create a system where clients come to you. If you build it strategically, it becomes your biggest asset. If you want to build or scale your personal brand in the UAE and need expert guidance, feel free to contact us on the given details, and make sure to like this video, subscribe to the channel, and follow us for more powerful business strategies. Hello everyone. The beauty and aesthetic industry in the UAE has grown massively over the last few years. From skincare treatments and laser procedures to injectables, anti-aging services, and advanced facial treatments, the demand for cosmetology and aesthetic clinics continues to rise. But many entrepreneurs still ask one important question: is this business actually profitable? Or does it only look attractive from the outside? In this video, we are going to break down the real business side of cosmetology clinics in the UAE, including market demand, setup cost, operational structure, profit potential, risks, and what actually makes clinics succeed or fail. The UAE has become one of the strongest beauty and wellness markets in the region. Why? Because appearance, skincare, wellness, and personal grooming are deeply connected to lifestyle culture here. Residents, tourists, influencers, executives, and high-income consumers actively spend on aesthetic treatments. Social media has also accelerated this industry significantly. People are more aware of cosmetic procedures, skin treatments, and anti-aging solutions than ever before. And because the UAE attracts an international population, demand exists across multiple customer segments. Not all clinic services generate the same profit. Some treatments are high-volume services, others are premium high-ticket treatments. Popular cosmetology services in the UAE include laser hair removal, hydra facial treatments, skin rejuvenation, Botox and fillers, PRP therapy, acne treatments, body contouring, and anti-aging procedures. Many of these services have strong repeat customer potential, and repeat customers are what make clinics profitable long-term. Before opening a clinic, understand this clearly. A cosmetology clinic is not just a beauty business. It is a healthcare and operational business combined. You are managing licensing, compliance, equipment, staff, hygiene, customer experience, and medical standards at the same time. That means profitability depends heavily on systems, not only demand. The clinics that succeed usually focus on three things: strong branding, operational efficiency, and customer retention. In the UAE, cosmetology clinics require proper approvals and licensing. This includes healthcare-related approvals, medical professional licensing, clinic compliance standards, and operational regulations. You cannot operate this business casually. Authorities take healthcare and aesthetic services seriously. That is why professional setup is extremely important. Compliance protects both the business and the patient. Now let's talk about investment. A cosmetology clinic can require significant setup costs depending on size and positioning. Clinic interiors, medical equipment, laser machines, staff salaries, licensing, marketing, and rental costs all impact investment. Premium clinics in prime locations require much larger budgets. However, many clinics also operate through leaner boutique models initially. The key is balancing investment with realistic patient flow. Now let's answer the main question. Yes, cosmetology clinics can be highly profitable in the UAE, but only when structured correctly. The strongest clinics focus heavily on repeat treatments and long-term customer retention. Because one-time customers are not enough, recurring services create stable revenue. Membership packages, treatment bundles, skincare subscriptions, and long-term client relationships increase profitability significantly. Clinics also become stronger when branding and patient trust are high. Marketing is one of the biggest growth drivers in this industry. Instagram, TikTok, influencer marketing, before and after content, and educational skincare videos all generate visibility. But the most powerful marketing factor is trust. Patients choose clinics where they feel safe and confident. Online reviews, professional branding, doctor credibility, and customer experience matter heavily. This industry is highly reputation driven. Now let's talk honestly about why some clinics fail. Overinvestment in interiors without enough marketing, weak operational systems, poor customer experience, unqualified staffing, and depending only on discounts to attract clients. Many clinics look luxurious but struggle financially because they lack structure. The successful clinics focus on retention, systems, and long-term branding. Once a clinic becomes stable, scaling opportunities become very strong. You can add new treatments, expand into multiple branches, build premium skincare brands, offer wellness programs, or create medical tourism packages for international clients. The UAE market supports premium positioning extremely well if trust and branding are strong. So is a cosmetology clinic profitable in the UAE? Yes, but it is not easy money. It is a professional business that requires licensing, investment, systems, branding, compliance, and strong customer trust. The clinics that combine medical standards with premium customer experience usually perform best. If you are planning to start your cosmetology clinic in the UAE and need professional guidance, you can contact us on the given details. Also, like this video, subscribe to the channel, and follow us for more business insights and opportunities. Hello everyone. If you are sitting in India today, you are already positioned in one of the world's largest food supply hubs. The global demand for Indian food products, whether it's rice, spices, or pulses, is continuously growing. But here's the reality. Most people never enter this business because they don't understand the system behind exports. In this video, I will break down a clear practical roadmap to help you start and scale a foodstuff export business from India. Welcome to this complete guide on foodstuff trading for Indian exporters. In the next few minutes, you will understand how to build the right foundation, what licenses and registrations are required, how the export cycle works in real business terms, and how to create a profitable and scalable model. This is a structured business approach, not just general information. Let's begin with the foundation. The first step is product selection. You should focus on products with consistent global demand such as rice, spices, wheat, pulses, or processed food items. Second, set up your business structure. You can start with a proprietorship or partnership, but for scalability, a private limited company is often preferred. Third, obtain your Import-Export Code (IEC) from DGFT. This is a mandatory requirement for all exporters. Fourth, secure your FSSAI license as you are dealing with food grade products. Fifth, open a current bank account that supports international transactions and foreign currency handling. Once these elements are in place, your business is legally and operationally ready. Now let's understand how the export system actually functions. The first step is buyer acquisition. You can connect with international buyers through B2B platforms, trade networks, or direct outreach strategies. The second step is commercial alignment. You finalize pricing, quantities, and trade terms such as FOB or CIF, which define cost and responsibility between buyer and seller. The third step is documentation. A standard export transaction includes commercial invoice, packing list, bill of lading, certificate of origin, food compliance certifications. The fourth step is logistics execution. You coordinate with a freight forwarder who manages customs clearance, shipment, and delivery. The final step is payment realization. Use secure channels like letter of credit or advance payment to minimize risk. This structured system ensures smooth international trade operations. In export business, profit is not accidental, it is structured. Your margins depend on three key factors: strong supplier sourcing, efficient logistics planning, long-term buyer relationships. Always negotiate better pricing at the sourcing level. Focus on volume-based trading instead of one-time transactions. At the same time, avoid critical mistakes. Never compromise on product quality. Always follow international packaging standards. Do not ignore logistics and hidden costs. Avoid working with unverified buyers. Discipline in execution is what separates successful exporters from failed ones. Foodstuff exporting from India is a high potential global business opportunity. With the right structure, compliance, and execution, you can build a scalable and sustainable international trading business. If you found this video valuable, make sure to subscribe to the channel for more practical business insights. And if you are serious about entering or expanding in this space, you can contact me using the given details. I assist exporters and entrepreneurs in building structured, compliant, and profit-driven global businesses. Let's take your business from India to the international market. Hello everyone. One of the most critical decisions when starting a business in the UAE is something most people underestimate: your business activity. This one decision determines your license type, approvals, banking process, and even how your business operates. Choose it correctly and your business runs smoothly. Choose it wrong and you face restrictions, delays, and unnecessary costs. In this video, we will break down how to choose the right business activity in the UAE with complete clarity and strategy. Let's first understand what a business activity actually means. In the UAE, every business is registered under specific activities approved by authorities. This activity defines what you are legally allowed to do. For example, consulting, trading, marketing services, or technical services. Each activity comes with its own rules, approvals, and compliance requirements. You cannot operate outside your registered activity. That is why selecting the correct activity is not just a formality. It is the foundation of your business. The first step is alignment. Your business activity must match your actual business model. Ask yourself, how will you generate revenue? If you are providing services, your activity should reflect consultancy or service-based operations. If you are selling products, your activity should be trading related. If you are operating online, you may require e-commerce or digital service activities. The mistake many people make is choosing a general activity without understanding their business flow. This leads to problems later. Always define your business model first, then select the activity. Every business activity impacts your license and approvals. Some activities require additional approvals from specific authorities. For example, healthcare, education, food, or financial services. Even some consultancy services may require certifications. Choosing the wrong activity can delay your setup or increase your cost. You must check approval requirements before finalizing your activity. This step is often ignored, but it is extremely important. Your business activity also affects your banking process. Banks evaluate your activity to understand your transactions and risk level. Some activities are considered higher risk and may face stricter checks. If your activity is unclear or does not match your operations, your bank account can be delayed or even rejected. Clarity and accuracy in your activity make banking smoother. Think beyond today. Your activity should support your future plans. If you plan to expand services or add new revenue streams, your activity should allow flexibility. Otherwise, you may need to amend your license later, which involves additional cost and process. Choosing a slightly broader but relevant activity can give you room to grow. But avoid going too broad without clarity. Balance is key. Let's quickly cover common mistakes. Choosing activity based only on cost. Selecting unrelated or multiple activities without strategy. Ignoring approval requirements. Not aligning activity with actual operations. And copying what others are doing without understanding your own business. Avoid these mistakes and your setup becomes much smoother. Choosing the right business activity is not just a legal step. It is a strategic decision. It defines how your business operates, grows, and interacts with the market. Take time to analyze your model, your revenue flow, and your long-term plan. Because once your foundation is correct, everything else becomes easier. If you are planning to start your business in the UAE and want to choose the right activity without risk, you can contact us on the given details. Also, make sure to like this video, subscribe to the channel, and follow us for more practical business insights. Hello everyone. In today's world, your personal brand is no longer optional. It is your most powerful business asset. Especially in a city like Dubai, where executives, founders, and professionals are competing at a global level, visibility and positioning can directly impact income, opportunities, and influence. In this video, I will guide you step by step on how to build and scale a high-end personal brand management consultancy for Dubai's growing executive market. Let's begin. Dubai is rapidly becoming a global hub for entrepreneurs, investors, and corporate leaders. With this growth, competition is increasing. Executives are now investing heavily in building their personal brand to stand out in their industries. They want to be seen as thought leaders, attract high-value clients, and build authority online. However, most professionals do not have the time or expertise to manage their personal brand effectively. This creates a strong demand for specialized personal brand management consultancies. A high-end consultancy focuses on strategy, positioning, and execution for premium clients. Let's understand the business model. A personal brand management consultancy offers end-to-end services. This includes brand strategy, content planning, social media management, and reputation building. You can help clients with LinkedIn positioning, content creation, video strategy, and public presence. Other services include ghostwriting, profile optimization, PR placements, and speaking opportunities. You are not just managing social media, you are building a powerful personal brand that generates business results. Your focus should always be on ROI-driven branding. To attract premium clients, your positioning must be clear. You are not offering basic social media services. You are offering strategic brand transformation. Your brand should communicate authority, expertise, and results. Focus on a niche such as CEOs, founders, or industry professionals. Your communication, pricing, and presentation should reflect high value. Premium clients are not looking for cheap services. They are looking for results, clarity, and long-term impact. Now let's talk about setup. You can start with a lean team and scale gradually. Key roles include content strategists, writers, video editors, and social media managers. You also need systems for content planning, approvals, and performance tracking. Having structured workflows improves efficiency and consistency. Invest in tools for scheduling, analytics, and communication. Your back-end systems are what allow you to scale without losing quality. High-end consultancies operate on premium pricing models. You can charge monthly retainers for ongoing services. Packages can include strategy, content creation, and brand management. Premium clients are willing to pay for expertise and results. You can also offer one-time consulting, workshops, and personal brand audits. As you scale, focus on increasing client lifetime value rather than just acquiring new clients. Recurring revenue ensures stability and growth. Client acquisition is critical. Your own personal brand is your biggest marketing tool. Showcase your expertise through content, case studies, and results. LinkedIn is one of the most powerful platforms for this business. Networking also plays a major role. Attend business events, connect with founders, and build relationships. Referrals and word of mouth marketing will drive high quality clients. Focus on trust and credibility. Scaling this business comes with challenges. Maintaining quality while increasing clients is one of the biggest issues. You must build strong processes and hire the right team. Client expectations can be high, so communication and delivery must be consistent. Focus on systems, not just effort. Automation and delegation will help you scale efficiently. A high-end personal brand management consultancy is one of the most powerful and scalable service businesses in today's digital economy. With the right positioning, systems, and strategy, you can build a premium client base and long-term success. If you are planning to start or scale your consultancy and need professional guidance, feel free to contact us on the given details. And don't forget to like this video, subscribe to the channel, and follow us for more powerful business ideas and strategies.